My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM InvestorService International Limited, and here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. The main feature from earlier this year and late last year, I suppose, as well, has been the formation of a double top, Adam and Adam type. We had a preliminary target X in the 588.5 area, which we saw reached 3 weeks ago. 2 weeks ago, prices reached the more fuller target X1 in the 572 area. Now, 3 weeks ago also, whilst all this was going on, I pointed out another newer pattern that was going on. I said at the time, and I quote, "Whilst all this was happening, another newer pattern seems to have been emerging. The March-based falling wedge pattern, currently 546 to 562. This is still an early pattern, and falling wedge patterns, as you may know from my commentary on a similar pattern in Chicago wheat, are not the best patterns to show direction. The data suggests that just under 70% of the time they have a bullish breakout. However, their tendency to have false breaks is quite high. Additionally, I cannot give a measure for target X until the breakout occurs, which hasn't happened as yet. So we're all a little in the dark there." End of quote. Last week was a symbolic week here in this contract. We not only had a daily key reversal up, but the week ended up as a weekly key reversal down. In addition, there were 3 successive countering moves. This indecision, on an intraday rather than an intraday basis, played out as the market caught sight of the rising long moving average, currently 545, and on the hearth of congestion below from September to October 2018 between 535 and 557. And so it was only this week that we saw a confirmed break higher. One final point: unlike Chicago wheat, here prices did reach their targets on the downside before turning back up. So, looking upwards, a preliminary target X2 on the upside for the falling wedge pattern would be in the 614 area, and a fuller target X3 would be in the 635 area. In the way, we have the recent 50% Fibonacci line at 597, and a fairly flatlining medium moving average, currently 600 even. Minneapolis wheat. There are a number of differences here in this contract compared to the one in Chicago and the Kansas City contract. The first was the delay in heading lower here compared to the 2 others. The next is that despite breaches on both the upper time, currently at 705, and the lower time, currently 609, of the August and December 2020 bullish Andrews pitchfork, this pitchfork still runs the market's bullish angle of attack. This during a time since mid-January until 2 weeks ago, when prices had been a sideways movement, lasting about 10 weeks or so. Indeed, I wrote the following 9 weeks ago and repeated each time since, and I quote, "Now, overall this one must remember a very keen and important thing. We're still within the bullish Andrews pitchfork. Nothing's changed there. Until that does, until otherwise, the bullish Andrews pitchfork is the main deciding factor." End of quote. I added 2 weeks ago when prices had just dropped below the significant 61.8% Fibonacci line of the old 2016-2017 move at 628. Unquote. "It is entirely likely that we will soon meet the lower time, probably during April. And I wish to make you aware that we now have a heavy looking band of congestion overhead between 628 and 650 even." Well, it looked like heavy at the time. Well, last week prices did meet the lower time and its close companion since December of last year, the rising medium moving average, currently 614 even. During the whole of last week and the start of this week, prices tested and retested those levels with 3 consecutive countering daily patterns. However, at no time, much like when we tested the upper time back in January, at no time was there a consecutive close below either the lower time or the medium moving average. This failure to secure a bearish foothold below ultimately led to the turnaround we've seen this week. So what now? Well, some may look at the 2021 high at 662, or the November 2017 high at 665, or the 50% Fibonacci line of the 2016-2017 move at 674. All these are valid and good levels to watch. However, my immediate view is at the middle time of the bullish Andrews picture, currently coincidentally 662. That would seem an obvious choice to me. It rises by 1 cent each day. Finally, there is something else here that I haven't seen in the other grains. With over half of April still to go, we are looking at a monthly key reversal here. If we close on the 30th of April, that is 3 weeks away from today, either above 643 or below 638, then we'd be on. Right now, it's strongly looking like a monthly key reversal up, but this can of course change. Thank you for listening. This short version, this weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.